Our finances are one of the most intimate parts of our life. I can't tell you how many times as a bank manager, I've had clients that are coming in for an appointment, and either the wife or the husband will call in advance and say, listen, don't discuss that credit card I have. Today, I'm going to be talking about debt. I'm going to be talking about some solutions if you have debt. But most importantly, I'm going to be explaining debt consolidation. Debt goes beyond bank statements. It impacts health, peace of mind, and relationships, with money issues like linked to 42% of UK divorces. Debt consolidation can ease stress and finances if used wisely. So I'll tell you the do's, the don'ts, the pros, the cons, but the success depends on how early you action things, honest conversations, and professional guidance. Make sure you watch all the way until the end because, as I said, I'll be going through the do's and don'ts. I'll be explaining some of the signs that you may need to consider debt consolidation. So, my name is Anthony Lindsay, and I've been in finance for over 30 years. Now, one of the key things about my experience is I did debt collections and pre litigation for about a decade. So, I probably forgotten more about debt and collections and credit than most people know. The first thing that I would tell you, if you are struggling with debt, or if you feel that you may be struggling with debt, don't bury your head in the sand. I've spent over 30 years in finance, both in the US and in the UK, and I've seen how quickly things can spiral out of control. And it usually comes down to just a few key mistakes. It could be the loss of a job, health issues, just a few things can just make things all go wrong. But please do not bury your head in the sand. Warning signs that you may be slipping into debt. And you need to be aware of these warning signs because it can make sure that you do things in advance and don't wait until things get too serious. So, relying on credit cards for everyday expenses. If when you're going to do the weekly shop, you're using a credit card and it's not part of a strategy, because sometimes people use a credit card that's 0% interest, it helps them budget, it helps them do the things that they need to do. Maybe they're getting air miles or they're getting some type of cash back. I'm not talking about that. I'm talking about not having enough money to do the things that you need to do and therefore using credit cards. That could be a sign that you're slipping into debt. Only making minimum payments. When you look at your credit card statement, it clearly will tell you somewhere in the fine print how long it will take for you to pay off that credit card if you keep making minimum payments. That's not a good strategy. You should always, if possible, try to pay the full balance or make overpayments. Have a plan to clear that credit card. So if you're only making minimum payments, you may be slipping into debt. Using new credit to pay off old credit. So you take out this loan to pay off another loan. And I'm not saying maybe you have a loan that's on 8, 9% and you're taking out a loan at 7%, or you're transferring debt onto a 0% interest credit card. Not talking about that. I'm talking about you just can't afford to do this thing. And therefore you're taking out another loan, which a lot of times won't help or won't work because your credit score might not support that. Bills piling up unpaid or they're late, no emergency savings. So people don't realize you should have 2 to 3 months worth of salary and expenses in a savings account. That way, if you hit a bump, you won't miss payments or make late payments. And stress, arguments, or avoiding money conversations. The conversation with your significant other is very important because being in debt can feel very lonely and it can be isolating and it can increase the stress on your relationship. So these are the warning signs that you're slipping into debt. If you see any of these things, it may be time for you to speak to a professional. Why the warning signs about slipping into debt are so important. So let's look at this. So debt doesn't stay still. It grows and it gets worse. It snowballs. So not opening your letters, avoiding the conversations is not a good strategy. It's not going to get better. It will only get worse. You'll stress over money and it often will damage relationships. As I said earlier, about 42% of divorces cite finances and money as one of the root causes. Missed payments can hurt your credit score for years. So it makes the things that you want to do in the future even more expensive. When I was just getting into finance as a younger person, I'd always say, well, it's not fair. Why, if I'm struggling, why are they charging me more for this interest rate? Well, it makes sense because the lender has more risk if you have a bad credit score. So to mitigate or cover that risk, they have to charge you more because it's more likely that a certain percentage of these people with bad credit are never going to pay back at all. So then that risk gets spread across everyone, but it really gets focused on the people that are in that bucket. The longer you wait, the fewer options you will have. This is another thing that I find that will happen with people. They feel themselves slipping into a situation where they're going to have problems. This is the time where they could have done the 0% interest transfer, or they could have done the debt consolidation loan. And they're like, no, it will be fine. I'm not going to talk to anybody. And they don't do anything then. And then when they've missed payments or have had late payments or have the CCJs, it's very difficult at that point to get the help that you might need. So look out for the warning signs, be proactive, don't avoid the conversations with a professional. I'm going to explain debt consolidation. So, debt consolidation, putting all the debts you already have in one place. So, it's combining multiple debts such as credit cards, personal loans, and overdrafts into a single, more manageable loan, sometimes secured against your home. We will be talking about debt consolidation for homeowners. If you're not a homeowner, a lot of the things that I'll be saying will not apply to you. You'll need to do a personal loan, which, if you've waited until too late, might not be possible. Keep in mind, you're not taking on new debt. Instead, you're restructuring the debt you already owe, usually at a lower interest rate and with one clear payment. I'm going to explain the difference between revolving credit and fixed term credit. A credit card is what they call revolving credit. So you can withdraw the money, you can use it, then you pay it off. Your minimum payment is a percentage of the total balance. It's not a fixed payment every month. And therefore, you don't have a fixed end date. And this can be part of the trap for a lot of people because they're able to make their monthly payments on their credit card. They feel that they don't have a problem, but they're only making the minimum payment. They're just renting the debt. And that's one of the things I learned when I worked in collection is that whole concept of you have a debt that you're renting because you owe £5,000. And by making the minimum payment, it's never really going down. So debt consolidation could be a route to securing a better future and reducing the stress both on you and in your relationship. Debt consolidation can help in several ways. So when can it help? When can debt consolidation help? To reduce the monthly outgoings by spreading payments over a longer term. So let's just say you owe £10,000 on a credit card and you're only paying the minimum payment each month. You might find that it would take 30 years to pay the whole thing off. By putting it on a fixed term loan, you may even do that over 15 years, but you know that there's a set time when that will be paid off and you're able to make fixed payments each month, which will help you with budgeting. To simplify finances with one clear payment. So if you have 4 credit cards, each of them you owe £5,000, 4 times 5 is 20. So now you take that £20,000 that you had spread across 4 credit cards, paying 4 different interest rates. You now put them on one loan, which will ideally, and you wouldn't do it if it wasn't the case, be on a lower interest rate. So the amount that you pay back will be less. It will reduce stress and improve stability. The stress that can be caused by not being able to make your payments each month, by the phone calls, by the letters, has a huge impact on your mental health and on your relationships. When I was working for one of the big banks, when I was working in collections, we actually had a phone number by our desks for Samaritans because quite often Well, often enough, you'd find people that are so stressed, they're considering, doing the unthinkable. So we'd have to refer them to Samaritans. So you can reduce stress potentially by doing a consolidation loan. When used early, before missed payments, it can help you prevent yourself from damaging your credit. So you might actually have a good credit rating and good credit profile, but you're slipping into that place where it's all going to go wrong for you. So these are some of the times when debt consolidation can help you. When it might not be right. I'm going to explain a few times when debt consolidation might not be the right thing for you. If you've watched my videos, you know I don't sell. I explain, I give you pros and cons that you can be a more informed consumer. So the truth is, debt consolidation isn't the right thing for everyone. And here are some of the reasons why it might not be right. If you continue borrowing after the consolidation, so you risk ending up with more debt in a worse position. I've seen this happen so many times. When I was at another bank many years ago, there would be some clients that would come in, we'd consolidate debt, and then 3, 4 years later, they'd come right back in with even more debt. So that if you don't have a disciplined approach to money, debt consolidation may just be delaying the inevitable. First, you need to fix your relationship with money and make sure that you're being more responsible with how you spend your money. If a new loan is stretched too long, you may pay more interest. So look at the numbers, crunch the numbers, and make sure that it's going to put you in a better position, that you're not paying more in the long run. Secured loans put your home at risk if payments aren't made. So every mortgage broker will always say in all of their videos and in all their printed material that your home is at risk if you don't keep up the repayments on your mortgage. And in many cases, the consolidation loan will be a secured loan against your property. So it will be a second charge. You need to make sure that you keep up your payments. Fees, charges, or early repayment penalties can reduce the benefit. So you may have another loan that you're paying off that has an early repayment charge. So that's going to cost you money. You may have penalties. There's different things that can add up. So do the math. Don't just walk into it thinking debt consolidation is the best thing, because it might not be the best thing. Make sure you speak to a professional. When I make these videos, it's not to replace you speaking to a professional who is licensed, who you know, who you trust, and who can tell you what's best for you. Let's talk about the pros or the upside of debt consolidation. It can lower your monthly payments. So if you're paying out on high interest credit cards, you're servicing the debt, you're not making less payments, but you're never paying it down. By consolidating it into one loan on a lower interest rate with fixed payments, it can lower your monthly payment, especially if you've done the math and you select the right term for the consolidation loan. One payment instead of juggling multiple payments over multiple payment dates with different interest rates. You can have one loan that you know when it ends, you know how much the monthly payments are. It can potentially lower your interest rate, especially when moving from high interest credit cards. Why would you do a debt consolidation loan if it's not going to reduce the interest rate? One of the things that you should be speaking to the professional about is the math behind the decision to make sure it's going to save you money in the long run and protect your credit rating. So we've been talking about the pros of debt consolidation. The last one is the reduced stress and healthier relationships. So as I said at the very beginning, quite often these money problems can cause stress in your life, and then that stress rolls over and it gets projected on other people. So you want to make sure that you avoid debt in the first place, but if you do have it, you want to have a solid plan. Let's look at some of the cons, so the downside. Debt consolidation is not for everybody. It's not a silver bullet. It's not going to fix every problem. It can have some upsides, but as with everything, you need to make sure it's the right product for you at the right time. So here are some of the cons or the downsides of debt consolidation. It can cost more in the long run, especially if you have not done the math. I keep stressing that. do the numbers, crunch the numbers. One of the things that I love about my job is I work with numbers, and numbers are numbers. And if you are looking to get solutions and you're truly looking to be objective about what you're looking at, the numbers will give you the answer. The numbers will tell you if debt consolidation is the best thing for you. The risk of reaccumulating debt. As I said, if you don't fix a bad relationship with money, debt consolidation is just going to delay the inevitable, which means you'll clear things up for a while, you'll continue to overspend, live beyond your means, and you're just going to end up with more debt. If secured against your home, then your home could be at risk. This will be one of the things that's explained to you if you come to me or if you speak to a mortgage broker about debt consolidation, either through a further advance or through a remortgage. We will stress to you that it is a second charge on your property. And therefore, if you don't keep up your monthly repayments, your home will be at risk. It's not suitable for everyone. So specialist lenders have strict criteria. We will be talking about specialist lenders and why, if you wait too long, you may end up working with a specialist lender as opposed to being able to go right back to your current lender and doing a further advance. Start the conversation early. I'm in the process of writing a new book called Wait Till I Get My Money Right. And part of it is about the fact that before you enter into a marriage or a serious relationship, you should be talking about finance, because this can be something that will cause unnecessary stress. And you may be coming from two different worldviews about money. It's good to have the conversation very early. So, debt consolidation, when used correctly, can be a lifeline, reducing stress, saving money, and even protecting relationships. But it's not a magic fix. The key is early action, honest conversations, and professional guidance. So when my wife and I were getting married, we did actually two marriage preparation courses. And anyone who's in a serious relationship, I would recommend it 100%. And one of the things that we were told by the people that facilitated the course, they were like, any other big decision you make in your life or profession, you have all this training, you have all of this counseling and advice before you do the thing. You even have ongoing professional development. But the biggest decision potentially that you're going to make in your life, which is attaching yourself to another human being, another imperfect person, some people do not go and get marriage counseling or do couples type of pre-marriage conversations. I would say if you're considering starting a relationship, a serious one, you're getting married, you're moving in together, whatever, make sure you have the conversation around debt. It is one of the best conversations that you can have. If you're considering debt consolidation, seek advice from a qualified mortgage or financial professional before committing. Making smart choices today can save you money, stress, and maybe even your marriage. If you and your potential wife or husband have this conversation early, you know what you're getting into. It doesn't have to be that thing that you're hiding from them or they discover and it causes an argument. My name is Anthony Lindsay, and hopefully you found this information very helpful. If you know someone that is struggling with debt, or if you're struggling with debt, or if you just have a community where you can share this video, that you can get the information to people that you may think everything is fine with, please share this video. I don't make these videos to replace speaking to a financial advisor or to give financial, legal, or tax advice. Instead, I want to open up conversations. I want to share information and hopefully, especially when it comes to debt, remove the shame, remove the isolation, because that's how it feels when you're in debt, especially when everyone around you thinks everything is fine. Don't hide the information from your partner. Have the conversation. Get the help you need early. Don't wait until it gets too late, because it will limit your choices and the resolutions will either take longer or cost more. I appreciate you watching. If you enjoyed this video, make sure that you like, make sure you subscribe, and make sure you leave a comment. When you subscribe to this video, it tells the YouTube algorithm that the information that I'm providing is useful and is helpful, and people want more of it. My name is Anthony Lindsay. That's my booking link. If you need to speak to me about a mortgage, you can reach out to me. I can help you with debt consolidation mortgages, remortgages, commercial bridging, anything that you need. I will always put you as the customer first. I'm not here to sell things. And I want to make sure that you always make informed choices that are what's best for you and your family.